Welcome everybody. This is the rescheduled Active Trade Management webinar. It is Friday morning. Active Trade Management is our topic. Let's knock out the disclaimer. All communications from trade systems are for educational purposes only. Futures and Forex trading does involve risk and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade in your own sole discretion. Let's get over to some charts here. Before the webinar, this is all in sim. By the way, just to underscore the fact that this is all for educational purposes only. These are not live trades. These are in sim, okay? I am using the object trader here. We have all our up-to-date indicators on the chart. This is the new OT here with the added goodies. I'm just going to quickly recap what I did about a half an hour ago here. We've got two trades active. We've got crude oil and we're long NASDAQ. Trend has been pretty much up to sideways for most of the morning, so we did take long trades. I left everything here so you could see what I did. On this retracement, let me just do a quick recap of how and why we got into these trades here. Let me start with NASDAQ. You can see that there was some pretty clear support at the mid-band. Several predictors sitting here. It had checked it already once with a bounce. So the last time it came down into here, let me blow this up so you can really get a good sense of what's going on. Can you see how this bar wicked down? Now, when we get these retracements, we have some choices. We can do bar close, we can do a box. There's several different ways to get in it. I chose a region box. You can see that after I drew the region box, when this bar closed up, we got filled long right here on NASDAQ, on the close of that bar. We're long 2. I originally started with a 5 and a 10, 5 and 20 tick trades. Does everybody see this? Everybody see NASDAQ? We're long 2 lot. Now to sort of keep the trade going, so we had something to look at here in the webinar, I intentionally went ahead and pushed the targets way out of the swings here, because it, you know, the 5 and 20 would have, I know it would hit the 5 and be real close to hitting the 20, and we wouldn't have a trade to look at. So the question now for the team, let's get into actively managing this trade. Of course, a lot of these settings we can do on OT in terms of the trail enablement. I'm not going to do that. I'm going to manually manage it with everybody in here right now. Okay. Where do you think we ought to take this stop? Obviously, we want to get the stop up. Let me give you a couple options. By the way, and we are long oil too. Let me just come back over here real quick. You can see that we had some chop around the mid-band. I missed this down here. I should have boxed it more or less right in here. Long enabled only. Trend is up. I missed it, so I boxed it right here. You can see we got filled on the long and the close of this bar right here. We are long 2 lot, and I pushed the targets way up to let the market run. Let's circle back here over to stand by for a second, please. Okay, and let's see here. Let me pull the stops up here. How many vote? We can go super tight on the stops or a little bit looser. Let me show a couple of stop areas right here. Let's take a quick vote on how tight we want to put the NASDAQ stops. Stand by, I'm going to move them around. And I'm going to take a quick vote on what we want to do with it. All right. Now you can see the bars are pulling back. We hit this resistance area, and I'm going to go a little bit looser down here to 46. Now you can see here, I get some numbers coming in. Brent, 46. So you can see here that if you were going to put a tight stop on NASDAQ, it would be a close below. So when we talk about tight and loose stops, we're talking about like this line 6 area right here. Clearly you can see that if you drag the stop up here, and it closed below 47, it would take you out. If I was trading this with live money, that's what I would do. In the interest of having to see where it bounces, I'm going to leave it right there. Either way, we're still in the money because we got filled here, right? We're still in the money. So what I'm saying, just to be clear, we are, we're trying to do some active trade management. We're trying to keep the trade going. Would probably be out of it right now. See how it just hit it, just broke it. So this is the trade-off when you are how would you say, working with trail stops. It's sort of a little bit of an art and a science, if you will, in the fact that you almost have to develop sort of a feel for it. Give it one more tick here. I mean, your choices are this, right? I mean, if you really wanted to have tight stops, the tightest stops you could have is a bar close when you come off of a swing like this, and that's sometimes one of the best exits you can have. You hit this resistance level right here. You were hitting it, hitting the predictor. It was pulling back, pulling back, pulling back. If you enable bar close up here off of this swing at 50, one of these closes down would have got you out real close up here like that. See that? Now, the trade-off when you do something that tight is that you wind up sometimes getting out of a trade too prematurely when it does a very small retrace into a support level and then bounces. Now, your only option there, if you want to continue the trade, is you have to get back in. You'd have to let it come down, find a support level, and then turn bar close back on to get right back in it. So you're getting in and out a lot more often. But the other trade-off is this: that you're not giving up all this on all this profit, back on your trade. See, up here, this trade was probably up 200, 180, 200 bucks all the way up here, right? And now you're going to close down maybe 100 bucks. How do you know at what time, when to use which type of exit? Let me lob that question out for the team real quick here this morning. Let's get over here before we do that and manage the oil stop. I take the oil stop up to right above break even. When should we, here? Let me put it in a different way. In the team's opinion here, at what times is it appropriate to use much tighter stops versus much looser stops? When is it appropriate to do either one, in our opinion here? When do you go with tight stops and when do you go with looser stops? What conditions warrant either one of those stop postures? Think about it for a second. When do you want to get in and out quickly, and when are you better off letting things a little bit loose? Let me help you out. Testing audio. Is this mic on? Anybody there? Hello? Anybody there? Oh, there's a little delay in getting the text coming in. Loose with a nice trend. Loose with a nice trend. Good, Hardy. Yeah, absolutely. When it gets choppy and range bound, do the much tighter stops. Yeah, absolutely. Yeah, so this is a good example right here. I mean, sure, you could make the case that the trend was up, but it was not like this morning. Let's quickly go back. We got our stops in, so we don't have to worry about this. But let's go back. Let's go back to the early this morning. 6:30. Here we popped down. We took this in the room. Remember? We said box it right here. I took this trade. So did Gary. Right in here. Remember? We said let it go. Let it go either way. Now this is right at the open, so we got these nice long runs. Look at this. Nice run. Pulls back. Wicks down to the mid-band. Back up. Pushes it. Back down. Run. And now we're in a range. So yeah, the time to be looking at. See, we're later in the morning. It's 9:42. We're getting a little long in the tooth here, coming into this lunch doldrums in New York, right? And so, you're going to get these ranges where it's going to come down, find support, mid-band predictor. It's going to bounce, top of the range, comes right up close to it, pulls back. What I'm saying here is that you can very quickly tell that you're in a trading range here, right? Here we came up, we took it out by just a little bit. We're getting a retrace. So when you see a condition like this and you're buying support here with whatever means you used to get in, this was the region box on OT, and you get up here, you know, your expectation is set that you're not expecting these big, huge, you know, 180 tick runs. I mean, occasionally you get that if there's some kind of news event or something that was to push it much higher. And who knows, we might bounce off of this and put in fresh highs in the next hour or so. We'll have to see what happens here. But yeah, now here's what might happen, and here's what we'll do if it happens. We just came down and held this swing. This is a higher low if it holds. If it holds that swing right there. And if we come up, just sort of planning ahead a little bit, how we're going to deal with this. If we come up and it pops through this top up into here, we're going to get very aggressive on this stop. And we're going to start to pull these. We're going to box it in. We're going to pull these targets down closer, a little tighter. In fact, how many of you, let's vote from the team, want to take this target 1 down into here? Yes or no? Target 1 within 4 ticks of the swing, yes or no? So if you say no, we leave it loose, way up here. If you say yes, we put it right in here. Target 1. Fade the swing. Yes, yes, yes across the board. Good. And what about we go ahead and take this target down too? Let's take it just about 6 ticks above that swing. Now, if we get up into here, we're going to start cranking that stop up tight. All right. In fact, let's put it a tick under that last swing right there. Okay, Nazi's set. How about I get some of these lines off of here? I know that all those arrows are looking a little bit confusing. Let me clean that off. Hold on a second here. Or is it drawing objects? Remove all. Sorry about that. Let's clean this chart up. There we go. All right, everybody knows the plan over here on Nazi, right? All right, let's circle back over here to our friend Mr. Crudabilio. I did a recap earlier where I showed that I missed this box here. That was okay. I went ahead and boxed it here. The trend was up. I was looking for a breakup. Closed long on this bar right here. We're in it. The stop is a couple of ticks above break even. Let's take a quick vote on some movement here. Active trade management. How many of you want to pull this target down into here? Yes or no on crude? Pull the crude target within the 56 swing. So we close up a bar or two. We're going to get it out, right? Get it out. Get it out. Yes, across the board. Excellent. And then let's do this. Let's go ahead and take target 2 a little bit above the swing, but let's fade that predictor right there at 65. What do you think? Now, on the crude stops, do we want to take the crude stops? Let me give you area 1 and area 2. Area 1 is a tick under that bar. Area 2 is a tick under that bar. 1 or 2. Take a vote on the moving of the crude oil stops. 1 is a little slightly looser under that bar right there. That's area 1, so you would type in a 1 for that vote. Cast your vote, 10 seconds. Tighter would be at the bottom close of that bar, would be vote number 2. Type in a 1 or a 2. Whatever prevailing vote there is, we will go with it. Ooh, a lot of 1s. Counting 1s. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, a lot of 1s. Counting 2s. We got Mario on a 2, David D on a 2. All right, you number 2s, you've been outvoted. We're gonna stick with 1 for now. All right, Nazi might stop out. Sitting 2 ticks above our stop. If it closes down here, that bar closes down and bips our 46, we'll be out. By the way, over here on Nazi, if it holds, how many of you want to drag these targets down a little bit more now, get a little less aggressive on the targets? like that. Could do the same thing on crude if we want. Yeah, we're getting some yeses on that. Okay, you like that? Now, why are we doing this? Why are we being so much more aggressive on the targets? Anybody? Why we started way up here? Remember, when you came in the room, we got started. They were way up here. Why are we dragging them down in here? Why are we doing that? Well, we're boxing it in, right? We are observing current price action. All right, oil got our stop. Yeah, I mean, this is how it goes. Yeah, price action, exactly, Hardy and Weldon, lower highs, lower lows, let the runner. So when we all get into these trades, we all think, it's going to run to the moon, and yeah, there's no more follow through, Brian. It's exactly. So we get sort of, I don't want to say greedy, but we keep thinking that, yeah, thing's going to run. We're going to come, is it 40 ticks straight up, hit all these weight targets. And then when she starts to hit her head here and then starts pulling back very deeply, we start to get a lot less aggressive. In fact, we can put target 1 right above that tick of that bar right there. And target 2, let's fade the top of that swing. All right, so we got 2 left on NASI. We've boxed it very, very tightly because we see the price action is showing us that there's not any follow through past 50 at this point, right? Oil, similar condition. We had our targets way up here. We dragged them down. We got more aggressive on the stops. By the way, those of you that voted for 2, turns out that might have been a little better deal there, huh? Because as I recall, and this is a trade-off when you do this, right? It's always a trade-off. Vote number 1 was for here. I mean, they were only a tick or 2 different. It really wasn't that much difference between the 2, but and number 2 was under this wick right here. So depending on how many contracts you have on, you're saving yourself, I don't know, it looks like a couple of 3 ticks on the more aggressive stop. All right. Now, question on oil, if we're going to take another trade on crude, how many of you want to, it's holding this swing right here. It just wicked it. How many of you want to wait for a deeper retrace, say down in the midband by these predictors, or how many of you want to take a bar close right now? D for deeper, B for bar close on oil. In other words, activate bar close, long enabled, and take 1 contract only. Type in a B if you want to activate bar close. So long entry bar close on oil, if and when this bar was to close up, you would get long right in here. Okay, your targets would be up here, and you'd have a 12-tick stop down here. Or wait for deeper to midband. Wait for it to get down into here to take a trade. Ooh, counting deepers. D, Brent, Mario, Weldon. We got 2 bar closes. David D and Dennis, no, more. Tom coming in, bar close. Ooh, it's about even. The deepers have tied with the bar closes. Well, if you want to do a quick risk assessment, let's look at it this way. If we did a bar close here, you'd probably be filled about here at this 45, right? Right in there. And so we have to look at how much return. In other words, where could it go after we're filled? Well, clearly you have resistance of 56, and there's one more slightly lower resistance right here at this 52, 53. So in terms of a scalp, you might be able to get 6 or 8 ticks off right here if it was to pop at a bar close, thinking through how the trade might play out, right? It could give you a scalper, and maybe you get follow through the upside. Now, the risk is that your stop from 45 would be all the way down here at 32 or 33, right? Yeah, Your stop would be all the way down here, which is where the deeper crowd for voting on the deeper mid-band retracement. All right, we got target. We get target 1? Where's target 2? We got target 1. It held that stop. See it? And target 1 is off. We only have target 2. How many of you I don't mean to shift back and forth too quickly, but this is what you got to do when you manage a couple of charts, right? Let's cast a quick 10-second vote on NASDAQ. Leave target 1 here, fading the 50 swing by 4 ticks. That's L for leave it there. Or H for higher, push it higher. Let it take that swing out and try to get a runner. 10 seconds, cast your vote. L, leave it tighter. Leave it within fading the top of the range. That's an L vote for leave. H, higher, meaning you're looking for a runner. Cast your votes, 10 seconds. Ooh, we got quite a mix here. We got Brent, who's fighting for leave? Brent, Weldon, Mario, Brian, all leaves. We only have 1 higher. David D. All right, so the leaves from the team voting perspective, the leaves have it. We'll leave it right there. Second part of the question on trade management on the NASDAQ trade, should we take the stop up now to below this bar? Yes or no? Or leave it down here? 46, 46 3/4. Yes. 1, 2, 3, 4 yeses, 1 no. This is what active trade management is all about. That's why we're doing this webinar. We want to talk about the fact that, it's possible, based on the volatility of the instrument you're trading, to look for the swings, adjust your targets and stops on the fly based on what the market's doing. By the way, quickly over here to crude. Crude never closed up. We are still retracing. We still have bar close long enabled. And it's still retracing, so we're not getting a bar close up. How many of you want to turn that off for now? Or leave long enabled bar close? All right, we just stopped out of NASI. Right now, in the current condition in crude, we have a bar close activated long only. So if this bar closes up, we'll get long. How many of you want to turn that off and wait till it gets down to here? W for wait. L for leave it on. Whatever the team votes, that's what we'll do. So I'll turn that off. There, it's coming down. It's coming down. It's wicking the midband. We're leaving it on. Ooh, quite a mix. Leave bar close on. 1, 2, Peter, Mario, David D, and 2 waits, Weldon and Brent. Coming right to the midband. Now, you have a couple of choices here. We could put a region box on this, but with bar close, if this bar closes up off the midband, we will be long. Let's just do 1 lot, and let's see if we can get 10 ticks out of it, okay? I don't want to do 2 lot again. I want to keep a tight stop on this. So what you're seeing here is that each time that these bars close down, it's not bouncing yet. So you have 2 choices. You can draw a region box. At this point, it would almost be more or less the same unless you went higher. So for instance, let me do a couple of trade-offs. In this scenario, if you're faced with it on another instrument, say on Monday. Now, if you said to yourself, hey, tell you what, Charles, I think that it's possible that, we could chop around this midband for a little while down here, and I could get a bar close. Okay, we just got in. Now, this is what I want to show. This is what I want to show. This is perfect. This is perfect. Now, if you'd done a region box and you engulfed the top of this candle right here, you would not be long yet. This is what I'm saying. This is the trade-off between a region box and a bar close, right? A bar close, you know, if this continues to chop around in here a little bit, and you didn't want to be in yet until it cleared this swing right here, then the region box is the better way to go. This is exactly what I wanted to happen, so I could show this. See that? Because essentially you're engulfing what is basically almost two candles, right? So, excuse me, in the region box scenario, you're looking for two bars, essentially two bars to close up. Right in here would have to close above here to get long. So in the region box scenario, you would not be in yet, right? The bar close you are. Now, given what we see here, how many of you want to take the stop up much more aggressively under the midband here? So L for leave it, M for move it, and put it like, you know, really tight, like, you know, a wick under the midband there, or a tick under the midband there. M for move it, meaning tight. M. L, leave it loose where it was before. In fact, it's right there. A vote for L, leave it, would leave it at the 12 ticks. So if you vote for that, what you're saying is that it might check the midband and bounce around a little bit, and I want to give it some wiggle room. Ooh, we got quite a mix. We got quite a few L's. Wow, okay, Mario, David D, Brian, L's, and then we got a couple of tight moves. All right, let's do this. Let's just leave it where it is for now, and let's see what happens. If we start to break one way or another, we can make another decision. How many of you want to put a region box on NASI right in here and take a long if it breaks up? Long only, enabled. Now that is a little more risky because it's quite possible that you could wind up with a head fake right up into here and then it flips on you. In which case your 12 tick stop would be down at, let's see here, 48.50. Less 12 is 3. Yeah, so you if you get long, it would be close up here, and your stop would be down here, somewhere down in here. All right, see what I was saying over here on crude? See how it's just kind of bouncing around in here? I'm not surprised. You know, this time of day, these markets are going to do that, right? They're just going to sit here and not. I mean, we've got some movement out of this, but it's really slowing down. We'll see if we can just stay in this range and pop it up a little bit, or if not, it's going to stop out. Yeah, it's coming down. This is exactly what I wanted to show. Everybody see the difference between bar close and region box right here? I'm going to go ahead and leave this on NASI so we can get another trade on. I'm not going to do 2. Let's just do 1 and set a 10 tick stop on it, so it would have to take out that top up there. And we got a 12 tick initial stop, so that's good. By the way, I was just a quick heads up here. I was talking to Gary before the webinar here. We were going through some of the new features on this new OT. Is a question for the team here? Has everybody been had a chance to get in and play with these different new settings up here? You like them? Have you tried them? Anybody not? Have you not tried them yet? You know, the PM trades. There's quite a few more trades in here now, right? You've got well, we always had region and bar close, but you got PM1 now, PM2, and the wedge, of course. Haven't tried everything yet, Dennis? Okay. David D has tried a couple of things. Mario's likes them. Need to try to get used to the wedge a little bit. Yeah, I would say I would suggest if you're new to OT and you're just playing with some of these new features, you gotta really do it in sim. Just really do it in sim until you get a feel for how this all works. Now he was talking about, and I think you've heard him say in the room that the programmer is going to be working on some trades that take predictor trades. So when it gets within a certain amount of a predictor, and you get in this case a long, right? You'd be getting bounces. It would actually go ahead and take those trades. You can get burned on bar close, David. That's what I'm trying to show here on this crude situation here. I actually prefer, most of you know, mid-band region box entries. That's pretty much my go-to strategy. Every day I like those. They work for the reasons you see right here, especially in fast-moving markets like NASDAQ this morning. It just pulled right back methodically, found support, boom, right up. Pulled back, boom, right up. Same with Russell, kind of did the same thing too. Let's take a look at a couple other markets while we're watching this. Let me see if I can do this. Hide predictor. No, leave predictor on. Let's see if I can hide object trader. We'll tuck this in the corner. This is our NASDAQ chart here. Let's hide object trader on crude, and we'll put it right in here. And let's drag a gold chart down. How many of you have been trading gold? Just a quick show of hands. Anybody been trading gold? Let me get the chart down here. Anybody trade gold? GC? We are in June, by the way. Everybody knows that. Switch your April gold contract to June. Here's gold right here. Yes, but not today. Gold can be tough sometimes. Yes. Yeah, gold can be a woolly beast. Sometimes it works in your favor and sometimes it doesn't. You know, when it doesn't and it's choppy, it's like any instrument. You know, you got to stay away from it when it's doing a little whack-a-mole. But when you get like let's open this gold chart up a little bit here. This is gold today, June contract. You can see that you were kind of sideways. Here's midnight Pacific time right here coming into this morning. So in the European session, pretty choppy on gold. And then right around 6 o'clock, I've noticed if you're going to start watching gold, I have to tell you that usually in this time frame right here, and I think Gary said that you had this in the crude pit room this morning. Did he had that chart up there, right? You guys traded gold this morning next to crude? Yep, good. All right, if you're looking for some movement on gold, usually somewhere between 5:30 and 6 a.m. Pacific time, it starts to get some movement. Right here, for instance, I don't know where you took the trades, but you can see that there was a little box form right around 6 o'clock on gold. Does anybody remember? Did you guys catch this long trade in the room? That was a popper. That was a honking popper right there. Look at that puppy. And it's still heading up. Yeah, it's still heading up. Yeah, so you can see that there was a number of trades here. Every time she pulled back anywhere near a predictor or a midband, there was a long bounce right in here. Long here, long here. Textbook midband long here. See all the predictors, all the support right here? You're buying support, taking coin at the top, taking coin, buying support. This last pullback here didn't quite get back to the midband. It held this higher swing, and then it did, you know, you're in the midst of a big run. Question for the team. How many of you want to buy gold on a bounce? And let me put an area for us to watch. How do you like down in here? I'll draw a little box right here. We come down into this area and bounce. How many of you want to get long? Yes or no? What do you think? Looks like anywhere between 50, 40 and, oh, I don't know, 50, 90, just under 51. Yes? No, Brent? You don't like that? Anybody? Retracement on gold for a bounce long, right in here. Yes? Chris likes it? All right, let's tuck it over here in the corner and keep an eye on it. Let's see what's going on with crude abilio here. Gold pulling back. No, we still got the region box on NASDAQ active, long only. How many of you want to take the oil stops up now to here? Yes or no? Or you want to go break even? You want to go even tighter? You want to go break even right on the trade entry? Yes or no, break even? Yes or no, break even? If you vote no, I'll take it up, but I'll leave it right there. So you'd only take a hit of maybe 2 ticks. Something like that. No on the break even, 3 yeses on the break even, 2 no's. We need it. Ooh, more no's on the break even. All right, so you want to go into the wick of that candle right there. Now we should get long on a bar close up here on NASI on that region box. Let's see if it fires. How many of you want to drag the target down? Get less aggressive on crude. How about like right here? Yes? What do you think? We're really boxing it tight there. Vote on the target. Yes or no? No bar close up yet on NASI. Just wicking the top of the box. I'll leave a tight stop on crude. Just one contract. All right, so we're tightly boxing it here. We had a decrease in volatility. We're not getting a lot of movement here. It's not popping like we want. It did hold the swing. We never broke the midband, so our stop was good. And so now we're getting much more aggressive on our tightening here, right? See what happens. Gold pulling back. Let's see if we get a bounce in here. We haven't turned anything on OT yet, so OT is still open on gold. And I don't think we want to turn on a bar close here. We want it to go a little deeper. We want it to keep kind of closing down and then bounce in here. Kind of like we got pretty much on crude over here, right? Remember when it was in here, we were saying to wait? And we patiently waited, came down, boom, boom, boom. We got in on a bar close. And let's see what happens. NASI's still stuck in that box. It's trying to close above it. Got one lot set for that. I know it's high. I know it's aggressive. We all wanted it to come lower to 45. I understand that. All right. Now, you could make the case on gold that there is a little swing shelf at this predictor here. See it? Right in here. You could get a bounce on gold. Anybody want to get in gold here on a bar close? Just type in it quick. You got 5 seconds. Yes or no? Bar close in gold long, yes or no? Right now. Right here off of 51. Quick, 5 seconds. Yes or no? Y or an N? Just type it in. What's your feeling? Ooh, we got, so far, cast your vote. We have 3 no's and 1 yes, so the no's are winning. 2 yeses, 3 no's. Right now, the no's have it. The no trade for you. See, that NASI bar is desperately trying to close up, but it's so slow it can't even close up. All right, the no's have it. No trade on gold. No trade for you. All right, we're coming into our zone on gold. Coming into the zone. All right, now if this bar closes up, we're getting real close to the target. How about break even on the crude stops? Yes? There, bam, got it. Woohoo! Just got it. We're flat. All right, back over to Nazi. Oh, I was just going to turn it off. Oh. Excuse me. I had a little tickle in my throat. Let me take a sip of tea. Stand by. We are long Nazi. Let's see if we can pop through that 50. Let's give it a minute here. All right, we're right at this wick of the 51. How many of you want to get bar close on oil now? I mean gold. Turn it on. Another yes vote coming in. We're tied. Ooh, 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 ooh. The tide is changing. We're sitting right on this 51. We're wicking it. Counting gold votes. 1, 2, 3, 4, 5 no's. Counting the yeses. 1, 2, 3, 4, 5. Ooh, dead heat. Exactly 5 and 5. All right. Tell you what, we're going to run out of time here soon. I would like to at least get one more trade off. Should have loosened that target on oil. I was just going to pop all the way back up here. That's all right. It's good. We're good. No bar close on yet on gold. We're coming into our opportunity zone here, right? Expecting a bounce. Come on, Nazi, pop it up. All right, some ideas on NASDAQ. If we pop through that top, it's quite possible we break it by maybe 3, 4 ticks. So I'm going to drag the target down into there, and I'm going to take the stop very aggressively under here like this. Or I could leave it looser, right there. We think it's going to play around here for a little bit. Now, I realize that this wasn't a good trade entry. I understand that. I just wanted to get something on here. Because the resistance, the reason for that is the resistance is so close. So we close bar up and we're within, what, 2 ticks of the top. Now, everybody sees the trade-off here, right? I mean, the trade-off is, well, you know, it could pop the top and you get a little runner out of it, right? But it's equally possible it could hit its head here, roll over, and stop us out. Not an optimal trade entry. I think we all see that and would agree, right? Okay, we're out of crude. We got our bounce. We got our scalper off. We got bar close on gold. So if we come down, as long as we keep closing down, it won't take a trade. But if it gets anywhere in here and bar closes up, we'll be in it. The only other option is you can wait for a region box to set up down in here. That's your alternatives, right? Feeling a little bit of heat on Nazi. Just a few ticks on this pullback here. Let's see what happens. So you could have been a little more aggressive on the stop. If you were very aggressive on the Nazi stop, you'd actually be out of it on a close below that bar right there. In my view, that would be extremely aggressive. But let's give it a little bit of wiggle room here and see if we get a little bounce at the top there. Kind of slowing down. You can tell the volatility is really slowing down here. It's all right. We'll give it a few more minutes. Any questions, by the way? Questions on what we're doing here? This is what I wanted to do last night, but everybody knows I had some technical issues. But as you can see here, we got that all worked out. Everything's running perfectly fine this morning. Made some good money. How'd everybody do this morning? Did you make money, break even, so-so, lose a little money? How'd we all do today? It's always good to make a little coin, put a little coin in the trading account on Friday morning, huh? Met the goal. Dennis, Mario, so-so. Mario, just a question for you, so-so. What were you trading? Look at crude still go. Look at that. YM? Yeah. You know, my sympathies to everyone who traded YM this week. It has been so ridiculously choppy. Excuse me. Yeah, you know, there was the one day that YM moved, and I think it was yesterday, right? But, you know, if you look at the rest of the week, it was really, really choppy. You know, tell you what, let me see if I can get a chart up where you can take a look at that. Man, I should just trail the stop on crude, huh? See it moving still? All right, stand by. Let me get another chart up here without hopefully crashing this computer down here. I want to get a 1040 out. Everybody knows the 1440 chart, 1440 minute? I'm going to show it to you right now. Let's look at Weimer. Let's take a look at old Wymie. Yeah, she went into Chop City this week, definitely. Let's get a 1440 minute up on Weimer. Most of you know, of course, 1440 minute chart emulates a day chart without the gaps. So it's good for futures contracts. Let me get up. Let's go, I don't know, let's go 90 days on it. And let me show you this chart right now. It's just a plain bar chart, but you can glean a lot from it in terms, we've looked at this in webinars before, in terms of trend direction, support and resistance, volatility. And let me show you this real quick. This is the sort of MO on Weimer. It's a little bit like ES in that way. It's large caps, you know. Stand by 1 second, please. I mean, Weimer used to move a lot more. Used to get consistent day-to-day larger moves. But what kills you, see, so let me explain what I'm talking about. Let's look at the past couple of weeks. I mean, it's this kind of, see these bars? I mean, the entire bars, some of them are less than 100 ticks. I mean, it's just brutal. Right in here, particularly. I mean, it stayed between 800 and 900 for almost 2 weeks. And so what this is telling you is that from day to day, each day, there's just not a lot of volatility in here, and so you just get a lot of chop. And what makes it tough is that when you, then some days you watch it, and then you get, boom, a huge move like this. You know, 300 ticks straight down. And then what have we had the past week? Here, let's blow it up. This is the past week or so right here. These tiny little doji bars. Doesn't that drive you crazy? I mean, the only decent day you had in here was here. I think this was Tuesday or yesterday. Had a little bit of movement. Let's tuck that in the middle. We'll talk a little bit more about it. We're not trading crude anymore, so we'll put it right in the middle here. So when I see this kind of price activity, especially when you come in the morning and it's all yellow and range bound in a tight range, you have to say to yourself on Weimer, you know, do I really want to trade this? And if you do, if your answer is yes, like I expect a breakout and a run, well then, you know, take little sort of smaller trades, dip your toe in there. By the way, gold's coming right into our opportunity zone. We still have bar close long enabled. We're coming right to a predictor and a and the mid band. We activated it back here. Each bar, since we turned it on, has closed down, 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 down. So when bars close down in a retracement, you're still in retracement mode. Now, we're getting NASI popping through the top. We have some options here. We can leave our target at 51 and just take it off the table and be happy with it. Or we can push it up and go higher for a runner. So cast your quick votes. L for leave, 51. M for move, move it higher. L for leave, M for move it higher, up to the predictor. Depends on whether you think we got a runner or not. Ooh, 3 moves and 1 leave. 3 moves and 2 leaves. The moves have it. You only get 5 seconds on the vote because we're going to talk about the stop in a second here. Right now the moves have it. Cast your vote. If you want to move it or leave it, this is the target on NASDAQ. The moves have it. All right, stops. We get a couple of options on the stops. We can go to here. Let's call that level 1, just under the wick of that prior candle, or level 2, within 2 ticks, 3 ticks of our entry. 1 or 2 on the stops. 1 would be here. 2 would be here. Ooh, a lot of 1s. We got 1, 2, 3 1s and 1, 2. Anybody else? 5 seconds. 1 or 2 on the Nazi stops. The 1s have it. You're going much looser than I would at this time of day. Tell you what, just for the heck of it, I'm going to put it. We're about to run out of time here, so I want to see if we can get this trade wrapped up. So anyway, back to Weimar. You know, here's the thing. You can see that. Just real quick on Weimar here. Excuse me. I think what sort of lulled us into trading YM earlier in the year was that if you want to contrast with where we're at right now, that in the better part of February, we were getting some pretty decent moves. Like, look at all these bars in here. Basically from there all the way over to, you know, here. Almost the whole month of, even this little spike here right at the end, up to that fresh high at 21,150 or something like that, you know, right here. But ever since March, ever since the 1st of March, the real only move that we have, okay, we just got into gold. Bar close up. We're long 1 lot on gold. We only have a 5-tick target on it. So let's see what we get here. I'm not suggesting that you throw YM completely under the bus and don't trade it at all. What I'm trying to say is this, is that you have to set your expectations and realize that, you know, some days it's going to be choppy, and, you know, when you see it, you have to either go into scalper mode or stay away from it. That's the way I've approached it. Most of you know that I love Weimar. I really do. I like that. I still like that instrument, even though it's not very friendly right now. But you notice I don't do a lot of calls on it in the course of the morning until I see something ready to break. You know, and then we're looking to catch the break. Otherwise, I've been avoiding it lately. All right, so here's where we're at. We're getting ready to wrap here in a few minutes. Take any final questions. We are long NASDAQ. We have a target here. I'm going to go ahead and drag it down, see if we can get it filled before we close out the session here. The team voted to leave a looser stop on NASI here, so it's right here. The other one was right here under the wick of that candle, so when it closed down, you'd be out with a small loss, couple of ticks. Gold is popping up. We had a bar close on gold. How many of you want to pull the stop up on gold right now up to here? Or even higher? You want to go there? Let me blow this up so you can see it. Take this region box down. Take this lines out of here. Let me get this Weimar chart out of the way. Ooh, look, oil's still popping up. Should have left that looser. You could have played oil a little bit more in here, huh? Dragged it down. We got filled right in here. Looks like it's going to run back up to the top there. How many of you want to go ahead and take this gold target down closer to the top of the wick of this bar right here? What say you, team? Well, at least we got some trades off. Let me think here. We had the, looking back on it, we had a NASDAQ trade off of this bounce that made good money. Remember the region box? We had 2 targets, both got filled, and then we stopped out. Or no, we stopped out on that one. We left them real loose. We're in another NASDAQ trade that's upside down by a couple of ticks. We had two crude trades. We had the trade from here, this region box that we were in when the webinar opened. Made money on that one, stopped out. And then we had a bar close off the mid-band here. So two winners on crude. Bar close, we took it off here. Should have left it on with less aggressive stops. And we are long gold. And if we pop up two more ticks, we'll actually get this little, is that 6 tick target? Yeah, looks like it's about 5 ticks. There, bam, just got it. Out of gold. Nice, nice, nice. Yeah, I see your comment there, Lee. Peter, why would you put the GC stop above the swing? Doesn't that mean it's less likely to hold? Well, I drove it. Excuse me. Just real quick before there's a couple of questions before we wrap up here. We're just about to pop the target on NASI. I'm going to get very aggressive on the stops. We're going to box it in very, very tightly here. It's either going to pop this or pop that. And I'll circle, I see there's a couple questions. I'll circle back and answer those. Gold stop, if you recall a question on the gold stop, Peter, the initial stop was 12 ticks. So we were filled here. I think it was it was either the close of this bar or that bar. Okay, we're out of NASI, we're flat. All right. Yeah, let's go. Yeah, so yeah, I think you came in lately. We mentioned the fact this wouldn't be an optimal NASDAQ trade entry because you're right near a top, and you should really wait for a deeper retracement. We threw it on here because it was holding this support. Hold on a second. You know, I still have a tickle in my throat from that earlier cold this year. Darn thing won't go away. Anyway, yeah, I mean, you know, we got in on a bar close here. We thought that the thinking was that it looked kind of strong since it was holding this higher swing right here. See how it held? It was holding, and it felt like it was going to pop, so we threw a box on it. In a more ideal condition, we would wait for retracement, and we did take this. I think you might have missed it. We were in a long off this bounce off a mid-band, so we did take, we caught that one. And we had a couple trades on crude. We caught this one, or no, it had bounced, and I boxed it. Look at NASI run. Look at oil going to come all the way to the top. I missed that, if you recall. The entry was right here. So what I'm trying to show is that you know, there's other places than the mid-band to take trades. We don't have to. The mid-band's the ideal, no question about it. But if you miss it, there are sometimes, you know, if the market's moving strongly in a given direction, you can take other trades and they can work out and be very profitable. The key there, if you notice how we managed the NASDAQ trade, is that we took the initial 12-tick stop and we gradually worked it up. That's why I was asking those questions. Everybody remember that? Remember we worked the stop up, working the stop up? And what we're essentially doing is you're boxing it tighter and tighter with the anticipation that it's going to move in your favor, and it did. See that? So that's the way she goes. All right, I'm going to go ahead and stop the recorder. Any final questions before we shut the doors down here?